I'm not really a fan of doing price predictions for Bitcoin, in particular, uh, fiat price predictions. I think focusing on the fiat price of Bitcoin is to miss the point of Bitcoin and its underlying value proposition. I think that the value of Bitcoin is that it is capable of being its own measure of value. The value of Bitcoin is that it provides an alternative unit of account entirely to the fiat unit of account, which is forever fluctuating, forever expanding. No one actually knows uh, the real fixed supply at any given time. Bitcoin's value proposition is that it can be measured in its own unit of account. So, all of that to say, fiat price predictions, not a fan of them. But I am going to make a fiat price prediction for Bitcoin. I predict a minimum market cap of $14.6 trillion for Bitcoin. At a minimum. And I don't quite have a timeline on that, but I would say let's put it in the next decade. $14.6 trillion market cap for Bitcoin. Why am I making this prediction? Why such a precise and specific prediction for a minimum value to Bitcoin's upside potential? Well, it's because right now the total market cap of all the negative yielding bonds in the world was $14.6 trillion. And the way I see it is if negative yielding bonds can have a market cap of $14.6 trillion, then so can Bitcoin. Now, before we unravel this, we need to define some terms. What is a negative yielding bond exactly? It sounds a little bizarre, doesn't it? Well, there's a good reason for that. Because it is. A negative yielding bond is a bond that you pay for the privilege of owning. So normally with a bond, which is simply you loan money to another party and they in exchange give you back this bond, and the bond is a promise to repay the money that you lent plus interest. That's a very simple concept. You are loaning money out, they will pay it back with interest. Otherwise, why would you loan the money? That's the whole reason why bonds exist. Why would you loan the money if you're not earning any interest on it? Why would you give it to a third party when you could use it however else you want? Why would you have the liability of a third party having your money if you're not being compensated for it? It makes no sense. That's the whole point of a bond. That's the whole point of a bond market. But with negative yielding bonds, not only does it not pay any interest at all, so you're loaning your money and you're not getting any interest in return to compensate you for the risk of loaning out your money. With a negative yielding bond, you are paying for someone else to hold your money. It makes no sense, I know, but if you can't quite wrap your head around this, that's a good sign. It means that you are sane. It means that you are still grounded in reality, because negative yielding bonds make no sense. They make no economic sense at all. They are an abomination. What is an abomination? It is something that by all natural right should not exist and should be extinguished if it does. negative yielding bonds make no sense, because why would you loan your money and pay the person that you are loaning it to for the so-called privilege of them controlling your money? And make no mistake, that is exactly what is occurring with a negative yielding bond. You are loaning your money, receiving a bond back, and now you are stuck with an obligation that you pay for. In essence, you are paying the person or the institution or the counterparty who you loan money to. They are charging you, even though you loan the money. It makes no sense. I know. If, like I said, if this doesn't make sense, good. It's not supposed to. So why do negative yielding bonds exist then? Well, most of them, although not all, are treasury bonds issued by governments. And the essence of it is that the governments of the world are so indebted at this point, this late in the game, that the only way for them to keep the game going, to keep the house of cards from all collapsing, is to issue negative yielding bonds. Because, of course, it's easy to be in debt when it actually pays to be in debt, literally. When your debt is actually returning a yield to you, the debtor. While if that's how economics works now, then it's not only is it easy to be in debt, it actually is better to be in debt. And of course, this is not sustainable. This state of affairs cannot exist indefinitely into the future, because this is so far detached from economic reality that we are not even dealing with. We are dealing with the absurd. Okay, this is no longer about like competing economic theories, Keynesianism versus Austrian economics. No, now we're dealing on the level of philosophical absurdity. We're not dealing with a rational system anymore. This is what the last dying gasp of the fiat system looks like. This is what it looks like when the laws of financial reality and economic reality begin to break down. You get things like negative yielding bonds. Here's the crazy thing, is that in this wild, upside down, inverted world in which there's negative yielding bonds, the crazy thing is that you can still make money on them. You can actually make money on negative yielding bonds. And here's how. If you buy a negative yielding bond and interest rates go down even further into the negative, you can actually make money on your negative yielding bond. Now, how does that work? It's to do with interest rate sensitivity of bonds. And basically the idea is that if you hold a bond but then interest rates go down, then the value of the interest rate that your bond pays is worth more, because now the prevailing interest rates in the economy are less. So the capital value of your bond therefore went up. If you were to sell your bond to someone on the secondary market, because it has a higher coupon than the prevailing rate of the bonds for that given term, well, they're going to pay you a little more for your bond. The capital value went up. That's basically how interest rates and interest rate sensitivity with bonds works. So if interest rates go up, the value of your bond, the capital value, goes down. And if interest rates go down, the capital value of your bond goes up. the fact that negative yielding bonds even exist at all is crazy. But the fact that in this economy, in this financial system, you can still make money on negative yielding bonds is even crazier. It implies that people expect, there's rational actors out there who expect interest rates to go even further into the negative. And to the extent that they are correct, they make money on that bet. And I mean, why not bet on that? It's not inconceivable for interest rates to go down further into the negative. Every incentive exists for central banks and governments to do so, because they're so indebted that the only way out is for interest rates to go even further into the negative in order to facilitate maintaining that debt, managing it, and just refusing to deal with the long-term implications of that mountain of debt. So, all that being said, not only do negative yielding bonds exist, but our upside down economic world where nothing makes sense, you can actually make money on them if and when interest rates go even further into the negative. And there's so much of these bonds out there that the current market value of them is $14.6 trillion. Think about that. There is an asset out there that you have to pay to own. And the value of all of it put together right now is $15 trillion. $15 trillion for an asset that not only is worth nothing, but is actually a liability. It's not even an asset. It's a liability. I mean, it is an asset if interest rates go even further into the negative, sure. But that just goes to show that our financial system is so hopelessly corrupt, so hopelessly indebted, so hopelessly beyond repair, beyond rescue, beyond redemption, that it requires the abomination of negative yielding bonds just to keep the whole thing running. And this brings me to my price point prediction for Bitcoin. $15 trillion at a minimum. Because in my mind, if the abomination that is negative yielding bonds, which make no economic sense at all in a rational universe, if they can be worth $15 trillion, well, then Bitcoin can too. Negative yielding bonds are a product of a debt-based fiat currency system that is at its end, that is gasping for breath, just one more breath to stay alive for a little while longer. Bitcoin, in contrast, not only does not operate for the sole purpose of maintaining a dying system, but it actually profits from the death of that system, the inevitable death. It is an asset that actually pays its holders to hold it by increasing their purchasing power. It is an asset that cannot be manipulated by governments or central banks or the powerful globalist elites. It is utterly incorruptible in that sense. No one can change its monetary policy. And Bitcoin does not care what the fiscal situation of your nation is. Bitcoin will not bail you out from bad decisions. Bitcoin will not allow its economic policy to be manipulated in such a way that it facilitates bad decisions to continue to be made. It does not bail anyone out. It is not used to steal the purchasing power of generations yet unborn, which is what national debt is. Bitcoin is the opposite. It is the inverse of all of what negative yielding bonds represent. Bitcoin is the hardest money that humanity has ever seen. Whereas negative yielding bonds, they are the opposite of everything we know about what money is or should be. They are the anti-money. They are the abominable manifestation of a financial system that long ago discarded the idea of hard money. And this is the final result. This is the end state of that decision. This is the logical conclusion of what happens when you abandon hard money and embrace fractional reserve banking, debt-based fiat currency. This is the end result. This is the end game of it. That is what you get. Negative yielding bonds in the end. And Bitcoin is the opposite of that. That is why I predict a minimum of a $15 trillion market cap for Bitcoin. Just based on the existence of $15 trillion worth of negative yielding bonds. To the extent that Bitcoin is the antithesis of negative yielding bonds, and that ultimately negative yielding bonds return to their intrinsic value, which is zero. Well, I think it's a very easy price prediction to make in that sense, because I am betting that the existence of an economic abomination like negative yielding bonds simply cannot exist perpetually into the future, and that value that is currently embodied in this anti-money will ultimately be transferred to whatever its opposite is, which is money. If you are anti-money, your opposite is money, and I anticipate the value will be transferred accordingly. Because it's not the case that the value embodied by negative yielding bonds, which is $15 trillion, will be deleted. The value, the capital that is being held in those bonds, ultimately will be transferred. Because that's what happens in a transition from one economic paradigm to another, is that the underlying assets of the dying and dead system return to their intrinsic value, which is zero. But the capital that had been embodied in them before does not go to zero. It is transferred to the next system. That is why I call Bitcoin the greatest transfer of wealth in human history. That's why it keeps going up and up and up and just doesn't stop going up. The phenomenon makes no sense until you understand what is happening. A transfer of wealth from a dying system to whatever the new one is, to the other side, to the new paradigm, which I believe it would, all appearances suggest that capital from the dying system is going into Bitcoin, and it will continue to do so, and so will all that value currently embodied by negative yielding bonds. $15 trillion of negative yielding bonds, an abomination of an asset. That value is going to have to go somewhere. And I'm betting that somewhere is Bitcoin.